Well, good morning, everyone. It's October 29th. It's my birthday finally, and I'm 49 years old. Can you imagine 49 years old? Oh, yeah, yeah. I still remember when I was 24, 25, when I was just getting started. I honestly don't know where the time has gone, but it's been an amazing trip. It's been an amazing journey. And the best part about it is I've got you guys along for the ride. Honestly, that's the reason why I do all this. That's the reason why I wake up every morning. I love doing this. And most of you can tell I live for this stuff. So let's get into the market today. We got a lot of earnings. Listen to this. This is what's coming. This is what's on the plate today. AMD, GM, Pfizer, COP, ConocoPhillips, Grub, Merck. We got a lot of stuff on the table today. A lot of stuff on the table. So broad market, let's talk about economy. We got FOMC meeting today, and we got Redbook, and we got consumer confidence. Consumer confidence is going to reflect on the GDP that comes out tomorrow, so pay attention to consumer confidence. On its own, it's not a huge report, but here's the thing. Consumer confidence, consumers are responsible for 2/3 of the economy. And the GDP is telling us how fast the economy is growing. Retail sales is 2/3 of the economy. So consumer confidence is really important, not in terms of what the number provides, but as a reflection, as an implication to what it means for the GDP, and that's coming out tomorrow. Typically, we have a subdued session the day before GDP comes out, but with AMD, GM, Pfizer, ConocoPhillips, Grub, and Merck coming out, all bets are off. I mean, really, all bets are off. We've got 156 S&P members to report this week, so there's going to be a lot of hidden pitfalls in the market this week. There's going to be a lot of hidden bombs, if you will. Again, pay attention. Tomorrow, Fed Chair press conference and the GDP. Those are going to be the big reports for the week, followed by jobless claims. Now, the market made new highs yesterday. We were anticipating that. Why were we anticipating that? Let me show you why. We were anticipating that because the small caps. Notice the small caps have been in a trading range. Look at the year here. Up, down. 144, 160, 144, 160. They've been going up, and they're almost at the top of the channel, and we're at the overbought price level. So I'm not expecting the small caps to help the large caps drive this market much further. And as you could see here, the RSI is already overbought. Now, I'm expecting the market to soften down. The Dow is already about 40 points, 45 points down. There's been mixed news out of China. So we're expecting mild downside. Now, let me show you something that you should be really paying attention to. I'm pointing this out every day now because it's becoming more and more relevant. Put to call ratio is extremely overbought. This is the put to call ratio for the last year. What happens every time it comes back to the 70s, low 80s, mid 70s? It pops back up. It's like a rubber band. It's like a rubber band stretching. And right now, markets are too complacent. They're too bullish. When we're about 125, 130, markets are too bearish. That's a lot of put buying. Right now, there's an overwhelming amount of call buying. Retail traders are getting a bit too exuberant, and retail traders usually make the worst mistake during turning points. And right now, we're seeing a turning point. And right now, the market's overbought. I think this, the put to call ratio, taken into account with the fact that the RSI is overbought and that we peaked out just a bit, and most importantly, taking that into account with the fact that the Russell 2000 is near overbought and near the upper range of the channel, that's telling us the market's going to cool off. Also, ahead of the Fed data, look at the bond market. Bond market it's near its range. It's near its support level right now. It's actually bouncing off its support level right now, as you could see right here. Yes, it's below the 50-day line, but it's above the 200-day line, and it's oversold. Oversold right here, just like it was oversold here where we bounced. And again, I'm showing you very similar to what I showed you yesterday because right now this is really important. You've got to pay attention to. I'm trying to show you the structure of the market. S&P overbought, small caps overbought. Put to call ratio telling us the market's going to cool off, and the bond market is starting to rally. It's up about 0.35% overnight, and I think we're going to bounce off here and hit the 50-day line once again and maybe go higher. I'm not expecting a raging bull market from the bond market, but Fed is going to lower rates. That's going to cause the bond market to rally, even if it's priced into the equation or priced into the value by about 85th percentile. Now, so I'm expecting overall market to start sagging a little bit. No, I'm not expecting a big bear move to come in. I'm not expecting a fall. I'm not expecting a panic. No, I'm just expecting the market to begin cooling off and taking us back here, where the Russell will come back down to the channel right here, and the S&P, I believe the odds are really high, and I mean when I say higher, about 90%, we're going to go back to the 50-day moving average, which will cause the overall market to become a little subdued. Now, before I let you go, let's look at these earnings that are coming out today. AMD up 3% in your all-time highs. The stock is already trading before the open. We're not even going to open for another hour and 25 minutes. So we're looking at overnight session, and nothing's going to change between now and overnight. But we look like we're going to hit, all-time highs very, very soon. The stock's been looking really strong. It's been trading near all-time highs. It's overpowering the overall market. And although it's overbought right now, I think we can have one more little burst before coming down. I'm not trading these stocks till they come back down to the 50-day line after earnings are done, but I want you to see what we're working with. So AMD's looking bullish. Let's look at GM. GM is looking bearish, actually, not bullish at all, kind of mixed, but this congestion here and the fact that the market's about to cool off a little bit, looks like we're going to go back down to the base, about the $33 level. So I'm not expecting anything crazy on GM. Let's look at Pfizer. Again, just want to quickly go over this with you. Below the 200-day moving average, above the 50-day line. Expect the stock to hit the 200-day moving average on earnings possibly and start coming back down. The trend is south. The trend is weaker. We went from 42 all the way to 36, even as low as 34. We're trading below the 200-day moving average now since July, entire summer. Nothing bullish on Pfizer expected. Let's look at some more stocks. ConocoPhillips, again, below the 200-day moving average, tethering on the 50-day moving average. Expect more downside. Maybe a pull back up here to the 200-day line, just like we saw here earlier this year, about 3 months ago, and then back down to the 200-day moving average. If you see earnings and the stock is trading below the 200-day moving average, when earnings come out, not a good sign. Not a good sign at all. So, Grub, let's look at just a few more and I'll let you go. Like I said, I love doing this stuff. I could do this all day. I could literally do this all day long. Again, notice blue chip industrial stocks are not as strong as speculative tech stocks, and that's kind of odd because China has the biggest impact on tech stocks. And that's why I think tech stocks are a little overbought and are going to come back to the overall market. Notice again, Chubb below the 200-day line, tethering at the 50-day line. Expect maybe a jump to the 200-day line like we saw here and another pullback. And lastly, Merck, which is in line with Pfizer. Although it's substantially stronger than Pfizer, it's actually above the 50-day moving average. It's near all-time highs. There's a good chance we'll get positive data, and we're not even overbought. So I like Merck. I do like Merck, and I like AMD out of all of these stocks. Now, let me show you something else you should be paying attention to. I'm taking you to my filters here. Let me show you my sector filters. This is really important, folks. This will show you how I analyze the markets. If you look at technology, it's number one right now. And utilities is behind. So you have all these defensive sectors here: consumer staples, utilities, retail, financial, and technology is number one. Why is technology number one? Technology is number one right now because, let me show you real quick. Let me just quickly. Technology is speculating that Trump and China are going to work things out, and technology is really driving the market. But folks, there's really nothing going on. There's no major catalyst right now, and I believe we're going to see technology, which has the most market cap in terms of driving the S&P higher compared to the Dow and the small caps. I think we're going to hit the 50-day line. So don't expect a lot of upside from technology or the overall market. But keep your eye on technology because that's what's driving the market right now. If you look at the Dow Jones, which has a lot more blue chips, notice it's not making new highs, where the S&P, which has a lot of technology, is making new highs. And I'll bet you, if we look at the top 100 NASDAQ stocks, we will see something very similar. And as well, prices overbought and coming down. Expect this little gap to get filled and us to move back to the 50-day line. I wanted to do a little bit of an extended session because it's my birthday today. I love you guys. I really, really live for this stuff. If you guys are enjoying this, send me an email, support@marketgeeks.com, or like our channel. Bye. Hope you guys have a great day, and I'll see you at noon today. We have a big session at noon.